Okay, thank you all for coming. If you have questions, please let me know in the chat. I'll have that pulled up and make sure that I can respond to whatever you're talking about. So this is advanced candlestick analysis. So this is not for people that don't understand what candlesticks are. I'm kind of coming into this webinar with hoping that you have a basis of knowledge when it comes to what a candlestick is and how they form and things like that. So basically, we're going to dive into two different ways to look at candlesticks. So first thing is we're going to be looking at outside. So that should be outside in. So we have outside in analysis, and then we have inside out analysis. So what that means is I'm going to be doing this for swing concepts. You can do this on lower time frames, but I'm just going to do it for the sake of swinging for this point in time. So, but this works on any time frames that you use. You'll just use lower time frames as we go. So outside in analysis. So for example, what this looks like is, let's go to KR. We traded this a few weeks ago or last week. So if you take a look at this, I'll clear it off. Basically what this means is we are going to be looking at the outside candle and then taking a deeper dive once it closes to give us more information on how we may enter, right? So when we look at this, we entered on this candle. This was on a Friday. It was the close of this week's candle. We're on the weekly time frame right now. So I'm highlighting it because this is what we're going to be looking into and taking a deeper dive of. So most people will look at candlesticks and just see how they form on one time frame. Not everybody is looking at the same time frame as you. It's just keep that in mind. So we want to look at other time frames and see how these candlesticks can form in these smaller time frames. So we can see if the people that are looking at these lower time frames are also bullish, even if they don't see this weekly hammer candle closing. So we were at support, we formed a weekly candle. And so what we're going to go do is we're going to look at the smaller time frames to see if they are syncing up with our idea that we may bounce here, because we formed a hammer here. So we go to the lower time frames. As you can see, we have a double bottom that formed here and here. So that's something that we can take note of that happened within this candlestick. This whole weekly candlestick, if we highlight it and go down and look at the daily time frame, we can see on the smaller time frames, you can see the two moves or the double bottom that form within this candlestick. So we could say, okay, the weekly looks bullish and so does the daily. We also have a bullish engulfing that formed on that weekly candle. We go down to a lower time frame, we still have this double bottom set up, and we ultimately broke it and retested all in the same candle. You see that? So we had a double bottom. Here's the neckline right here. And we ultimately came up, broke above, retested it, and that's where we closed at for the week. So then if we look at lower time frame, not too much to see besides the fact that we just bounced right off the support. So when we're looking at this, we can look and take a deeper dive into this weekly candle to see all the different things that are coming before this candle forms. Okay. So this is one way to find end of day swings, looking at how for example, you could do it on the daily, then you go look at the 4 hour and what those candles looked like, and then look at the 1 hour and then maybe the 15-minute, how all those synced up. And you want to find a couple different charts that match up with this as well. So that's kind of going outside in. And so what that is for someone who is more conservative and wants to wait for the full candle to fully develop, right? So that's someone that wants to take the swing at the end of the day, end of the week, and have it fully develop and see how that candle completely closes. So what I mean by that is most of the time when you are a trader, you will be looking at a time frame, you'll find a setup. So for example, before this candle even opened, say we were here, and we were looking at this. This is what we were seeing at the moment. We'd go, okay, this is starting to come up on some support here. You can see it. There's a rejection there, bounce there, bounce there. We're at clear support. So without even looking at that, knowing that that candle's there, you would already have an idea that you may want to take a bounce around this area. So you keep an eye on it. That's why you put it on your watch list. You're watching it, right? And then finally the time comes where you see this weekly candle forming at the end of the week when you had it on your watch list all week. You go down to the daily time frame, you see the bullish engulfing. You go to the 4 hour, you see the double bottom. And then pretty much from there, you see the retest of the double bottom. And you say, okay, I'm going to get in this trade and I'm going to take it, right? So you get in here and it plays out well. It paid well. It did really well. I think it did 200%. But what could we do better about this? Like, how could we maximize this trade as much as we can? So that was going from the outside, the bigger time frame, and going to the inside, which is like kind of the guts of it, looking at the lower time frames and getting analysis on those. Okay, so think about that. If you caught this play, right? But as you can see, when we went to these lower time frames, when you first decided to take this trade, you saw this here. That's why you took the trade. But think about this. If you were on the lower time frames and you already had this set up in mind because you saw it on the weekly time frame, you go to the daily time frame and you see this double bottom, don't you think you would enter earlier? What if you went to the 4 hour and you saw this double bottom forming here? Or you even saw this hammer candle forming here. Okay, let's see if we go even lower time frames and see if there's something that would give us a reason to enter this trade. Pretty much it would be the double bottom. That'd be the example for this. So what I'm saying is that you didn't have to wait for this weekly candle to close. Man, where are we at? There we go. You didn't have to wait for this weekly candle to close to get an entry. And you also would be up probably 100% if you would have taken the entry of the double bottom right here, right? This is probably the cleanest you would see it. Gapped up, came down, filled the gap, building a base, and then boom, broke to the upside. And then if you even missed it, you could have taken the entry here. Our entry on the weekly time frame was somewhere around here. So if you would have been able to take a nicer entry here, this would have been another 30% on the contracts. You could have taken your entry on the double bottom when it came to this support around here and refused to make a lower low. So my whole point is, instead of waiting for this weekly time frame to close, look for bullish indicators on the lower time frame so you can get into this move even quicker. So I'm going to show you another example of SPY that I did. This is what we did on Friday. So if you're in the signals chat, we did SPY calls for a day trade, and it worked out in our favor because we used the same approach. So I'm going to delete that. So they ended up going, we locked in gains of 52%, but they ended up going about 100% by the end of the day. But the only reason that it worked out that way is this was going to be a swing. So the interesting part about this is we go to the daily time frame. Actually, I took this trade based off the 4 hour. So we look at the 4 hour time frame. See this inverse head and shoulders we have forming, or that we had formed here. So there's the shoulder, head, shoulder, breakout. Okay, so now what we're looking at is we kind of have a neckline of right here of where we built a base of support. So basically the idea is we're playing a break and retest of this here. And so what I did was I said, okay, this whole area right here, this is kind of a zone acting as a zone of support. So right in this area here, you can see those wicks, see it's kind of rejecting this area, and that's why I draw this zone. So we had an inverse head and shoulders that broke out on the 4-hour time frame, which this candle here alone, that was 100% move. So how, and most of the time people are going to be getting in right here when they see this bullish engulfing. That'd be the same confirmation that you saw on the weekly on KR of a hammer. You see this on the 4-hour, you're more inclined to take calls, right? So how did I get an early entry on this? And we were able to basically, we start on the 4-hour. We built our idea. We had this inverse head and shoulders. We had the breakout. We had the retest. If you look at the line chart, it might be a little easier to see, but basically we broke out of this area, came back down, retested it. So I go to the lower time frame. What dip are you talking about here? No. All right. Well, let me know. Yeah, here. Yes, we did play calls there, but this is a different day. This is from Friday. This was last week, I think. We did play calls here. This was a break and retest of this area here, and we did play calls. This is just a different opportunity.
Got it. Thank you.
Yep. Okay, so this is just the most recent opportunity that we've been presented, right? So inverse head and shoulders, we came down. Now we're looking for a retest to act as support in this area. So now let's highlight this and see what could have given us the idea of getting calls. Okay, so first of all, we're refusing to make lower lows, right? We're refusing to make lower lows. But the main reason why I got into this trade is because we were forming something bullish at support. So the reason I took this trade is because we had this falling wedge forming. And it gave us an easy entry. We entered in on this candle here, sat on our hands for a few minutes, and then it ended up breaking out. The target really for this move on the 4-hour time frame would normally be a first target of here and here. We just got a really nice entry because we went to the lower time frames because we already had this idea of it breaking to the downs or retesting this area as support. So basically we started on a bigger time frame, seeing the support and saying, okay, we could bounce here. So from there, we go down a lower time frame and let's see if there's any sign of a reversal. And all I did was, boom. If you go to the 4-hour, and this is where you're finding this idea, the whole idea of, so this is the same idea of outside to inside analysis. So we saw this form, but then we also, so then we went down to the lower time frames to make sure it still looks healthy price action below the surface. And it did. So you could take calls and swing calls into the next day. But let's say you did it the opposite way. You already had the idea that I was going to come down and break and retest this area. This was the chop zone we were in for a really long time. We broke out of it, came back down, and looks like we're retesting it. So basically the idea is that we already have that idea of that trade in our heads. Like we're already thinking about doing that. Okay, so why don't we go down a lower time frame and see if we can catch it earlier? So we don't necessarily have to wait for this 4-hour bullish engulfing to form. We can go to the 1-hour and see that it's holding. We can go to the 15-minute and see that it's forming something bullish that's giving us a really early entry. If it doesn't work, our stop loss is right down here. So if you draw risk to reward just based off of that high, this is where we got in. We would have sold below this zone, right? And our target was initially here. That's already a 4-to-1 risk to reward. And this is a tiny target. And it ended up being a 5 or 6 to 6.5 risk to reward. So the difference between what I'm talking about is there's a 4-hour where you can wait and then go look under the hood, or you can look under the hood first to make sure it's all good and get into it and anticipate this nice reaction. So by the time a lot of people are already starting to get in, you're already looking for the reversal on the lower time frames, and you just got a little better of an entry. And if it's going to bounce, you're going to have a lower likelihood of getting faked out. So that's the two differences. So there's starting on the daily, and even so there's 3 ways you could have gone about taking this trade, getting into the same idea. Okay, so we have this support zone where we broke, and I'm going to give you the 3 different ideas people could take. So there's this zone we have. First idea would say, okay, we have this pin bar, hammer type looking candle, strong wick to the downside. So I'm going to take calls. It formed on the daily. I'm going to take calls before close. Okay, or you could be the guy that says, oh, we had a bullish engulfing on the 4-hour, right at support. We had a double bottom. I'm going to take calls. That's your other idea. Or you could have been the person that got in here and rogue calls up and been able to cash out most of your contracts and swing a few. So there's 3 different ways you can do it. It's just a matter of when you get in and how quick you are to see what's going on the charts. But if you're this person that is looking at the daily time frame and saying, I'm going to take this trade because of the daily time frame, make sure to look under the hood and look at your different time frames. Make sure they all look good. But if you're going to be this person, you got to do the exact opposite. You take this entry, you want to make sure the daily candle looks good for a swing. You don't want it to turn into something ugly like this. You wouldn't want to be in calls here because it retested whatever and then looked good for a move on this day. It came down, retested, you got in, it looked good. You would not want to still be in calls because this candle does not look bullish. This looks like something you'd want to be bearish on. So we can go through, and here's another example we can look at. We had a 4-hour double top. We go to the daily time frame. This was just a break and retest of this area right here. See that? This 39 around 390 area. So if you go look, if we take a look at this on the weekly time frame, this was our most recent lower low. And then this is the lower low. And now we're trying to create a lower high, right? So if we go down to the daily time frame, why we rejected off this so strong is we could have been expecting that because it was a weekly break and retest. So then when we go to the lower time frames to look for an entry, we could see on the 4-hour, it's a double top. That's confirmation in itself to get in. We broke the neckline, which was right here. Boom, you had an easy move to the downside. And let's say if we went to the lower time frames, you probably wouldn't have guessed that this was going to dump like this, right? But lower time frames would have given you an entry on this rejection here. See how we created this? This was a lower or a higher low. And then we broke that higher low and rejected it. And then basically we could have rode it all the way and sold before the Fed meeting. That would be what would be most smart. So you would have got in at 385 and would have been able to peak out at around 381. So a $4 move, almost a full percent move on the our S&P 500. So that's pretty good. So that's the whole idea behind moving between these time frames. So if we go back and look at that one more time. So you could have been the person that took this bearish engulfing at the end of the day. right? You could have taken that trade, or you could have been the guy that took the 4 hour right here, this 4 hour bullish engulfing, or you could have been the person that was on the hourly and saw this break of the most recent lower high, or sorry, most recent higher low, and taken that breakdown and rejection here, which would have been about the same on the 15-minute. And it would have given you a decent better entry than the person that waited all the way for the daily to close. Now, what if, so that's pretty much all I got for you guys. That's basically, there's 2 ways of doing it. There's looking from waiting till the end of the day and looking under the hood, or there's the person that's intraday getting into their trade intraday based on the lower time frames. They have an idea that's already in their head, and then when it gets to that point, they look on the lower time frames for a quicker entry. Does anybody have any questions? What trading platform is this? Trading View. Just standard Trading View. Does anybody have questions? Do you all understand? No problem. Happy to help. Does this make sense to you guys? So the idea is, just to go over it one more time, you want to start on the higher, or you can start on the higher time frames. All of it has to start with the higher time frames. You pick your trade idea based on the higher time frames. See how none of these trade ideas came from the lower time frames. Then what I'm talking about is entries. This is advanced candlestick entries. So you could have waited for this bullish or bearish engulfing to form. You could have waited for this one. When you already had this trade idea in your head, you're just waiting for confirmation. But if you would have went to the 15-minute, you would have saw this bearish pennant forming right under the most recent higher low, and you could have taken your entry there. And same thing for this, you would have missed pretty much the entire, or a good portion of the move. So that's basically my idea behind this. One other trade that, what time frames do you typically use intraday and after market close? These are the ones that I use on a day-to-day basis. Weekly, daily, 4 hour, 1 hour, 15-minute. I don't use 3-minute really. It's not really necessary for my type of trading, but yeah, I use these. I find my ideas on the daily, weekly, or 4 hour. The 1 hour is just for a confirmation. 15-minute is for entries, like we just talked about. So you really could just use these 3 time frames and wait for the daily candles to close. But if you prefer better entries, that's why I'm teaching you this whole thing of anticipating this bearish candle to close. So then you can take it for a swing. Anticipating this bullish candle to close. So you're up, and if it gaps down the next day, it doesn't even matter because you were up a decent bit already from the trade. So it's just taking away profits you didn't secure. Anybody else got questions, or are you good? Good? All right, cool. Thank you guys for coming. Let me know if you have any questions in the chat, in the trade floor, wherever you want. But yep, I'll see you guys for the markets next week or tomorrow. And yeah, let's crush it this week.